Hello and welcome to today's interview. I'm Kiri Blore and today we'll be talking all about the recent Swiss GDP data release. On the lines is Bruno Parnisari, Head of Short-Term Economic Analysis at SECO, to talk through the data. Hello Bruno, thank you for joining us. In the first quarter of 2014, Switzerland's real gross domestic product increased by 0.5% on a quarterly basis and at 2% on an annual basis. Does this keep in line with your forecast?
Until now, so there is nothing new. So if you want to, we publish on a quarterly basis new information every quarter, but the story we tell is not, more or less always the same. And if you want, we have behind GDP growth in Switzerland, we have two main forces. On one hand, you have the international trade, and on the other hand, you have internal demand. And since 2010, we have more or less, we can explain GDP growth in Switzerland by the dynamic of the internal demand. And the contribution of the international trade were during the past, and although during the first quarter of 2014, relatively modest.
Investments in construction, which benefited from the mild winter, made a strong positive contribution to growth, as they did in the previous 2 quarters, posting a rise of 2.7%. Is this sustainable, considering the fight to increase the minimum wage?
So if you look at the share of the building investment in GDP, so the share is more or less 9%, and it means that if you look at the historic in an historical perspective, a share of 9% is not so high. It means that we have new investment, and the dynamic of the building investment is quite high in Switzerland, but the level in comparison to the level of GDP is not as much as in the 90s, for instance.
We see that some exports of goods increased by 2%, but several did not. Do you think this is because of the struggling economy in the EU?
So if you look deeper into the data, so we have one sector, and this is the sector of chemical and pharmaceutical products, and the share of this sector in our export of goods is about 40%, more or less the half of our export of goods are chemical and pharmaceutical goods. And during the last quarter, we had a strong increase in this sector, and it means that the correlation between the chemical and pharmaceutical industry and the EU business cycle is quite low. So it means that every quarter we have to look at deeper into the data to understand why we have sometimes a positive impulse for growth from our international trade, and very usually the chemical and pharmaceutical sector has a high meaning in this context.
The IT service data processing sector has increased. Do you feel this is perhaps the future of Swiss exports? And does this have any advantages over other exports?
This is a tendency that we observe in a lot of countries, as a move in the direction of more services in the economy, and sometimes of more services that are quite difficult to measure. So maybe you know that there is in this year a big revision of the national account in Switzerland and in a lot of countries to integrate the research and development investment into the investment category of GDP. And this is something that will have an impact on the level of GDP of Switzerland. And there are already some estimation to guess the impact of this integration of research and development in the GDP in Switzerland, and the impact could be quite high. So it means that in general we have a move in the direction of more services, and in Switzerland and in some countries we have sometimes more investment in research and development, and this could have an impact on GDP as well.
And finally, overall, the data release is positive for Switzerland. Do you see this as sustainable in the long term? And will other countries, such as France, who had disappointing GDP data, have a negative effect on the future of the Swiss economy?
Again, we have to put this reflection in the context of the main forces behind GDP. As I said before, we have, broadly speaking, two main forces, internal demand and international trade. And for a lot of countries, we hope that in the coming quarters, and at least in 2015 and 16, we have some impact of international trade on GDP in Europe and in Switzerland. But until now, we have more the internal demand explain more or less 90% of GDP growth. And it means that we have in our forecast a projection that the international trade will have in the coming quarters and in the coming 2 or 3 years more impact on GDP, but this is a forecast. And so until now, we don't know. And the dynamic of international trade will play a big role in the coming years. But if we compare 2010, 2015 with the year 2002 and 2007, we have to admit that the international trade will play certainly now and in the future a less dominant role than during the year 2002 and 2007.
Thank you once again, Bruno, for taking the time out to talk to us. Of course, you have been watching at Dukascopy TV. Click back for more from Ben Jones, who is covering Brazil.